Good day Forex trader. Your USD Forex signal, sell off not overdone ahead of FOMC. The pair will likely continue falling ahead of the upcoming Fed decision. Bearish view. Sell the Euro USD pair and set a take profit at 1.1200. Add a stop loss at 1.1350. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1300 and a take profit at 1.1400. Add a stop loss at 1.1200. The Euro USD pair declined slightly as traders waited for the upcoming Federal Open Market Committee, FOMC, interest rate decision. The pair is trading at 1.1285, which is about 1.75% below the highest level this month. Fed decision preview. The FOMC started its two-day meeting on Tuesday this week. The meeting comes at a time when recent data have been supportive of the American economy. For example, earlier this month, data revealed that the American unemployment rate declined to a pandemic-era low of 3.9%. This means that the country is in a full employment situation. Additional data showed that the country's inflation was also rising. The headline Consumer Price Index, CPI, rose to a 42-year high of 7%. Excluding food and energy prices, data showed that inflation has jumped to over 5% in December. At the same time, data showed that the American building permits and housing starts jumped sharply in December. Home prices have also done well, helped by the relatively low consumer inflation data. The only negative data was December's retail sales numbers. Therefore, there is a likelihood that the Federal Reserve will sound a bit hawkish when it delivers its interest rate decision today. Analysts expect that the bank will leave interest rates at the current range of 0% and 0.25%. At the same time, the bank is expected to hint that it will implement between 3 and 4 rate hikes this year. The Euro USD pair has also been in a downward trend because of the rising risks in the financial market. This explains why the S&P 500 and Nasdaq 100 indices have declined into the correction zone. Investors are both worried about rising inflation and the ongoing crisis about the United States and Russia. Euro USD forecast. The 4-hour chart shows that the Euro USD pair formed an ascending triangle pattern that is shown in blue. The pair managed to move above the upper side of the ascending triangle pattern in January and rose to a high of 1.1487. This rebound was short-lived as the pair has moved below the ascending line of the triangle pattern. The pair has also moved below the 25-day and 50-day moving averages while the Relative Strength Index, RSI, is hovering slightly above the oversold level. Therefore, the pair will likely continue falling ahead of the upcoming Fed decision. This could see it test the support at 1.1200. Gbp Usd Forex signal, struggling to clear $1.3520. Support at $1.3490 looks likely to be pivotal. Today's Gbp USD signals. Risk 0.75%. Trades must be taken between 8 a.m. and 5 p.m. London time today only. Long trade idea. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.3490. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 25 pips in profit. Take off 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to run. Short trade ideas. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.3573 or $1.3602. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 25 pips in profit. Take off 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Gbp Usd Analysis. I wrote 2 weeks ago that if there were no surprises in the UK CPI data release due that day, then the bullishness should continue. I was looking for a long trade from a bullish bounce at $1.3614. This was a good call, as although inflation came in slightly higher than expected, we saw a firm bullish move with a low just a few pips above $1.3614. The price of this currency pair has been falling for a few days but found some support yesterday. This suggests a bullish reversal lasting a few days is possible but cannot really be called, as we have the FOMC release later today after the London session ends, which could cause a firm directional movement in the US dollar in either direction. The price is likely to not move strongly in either direction before the FOMC release, so it may be wisest to trade today's London session by looking for scalps off any bounces from key levels and then letting them run until they lose momentum. The most promising opportunity would seem to be a bullish bounce at the support level close by at $1.3490. If the price can get established below $1.3490 during today's London session, it may well continue to fall to at least $1.3445. Aud USD Forex signal, bearish outlook ahead of Fed decision. The pair will likely continue falling as bears target the next key support level at 0.7090, which was the lowest level this week. Bearish view. Sell the AUD USD pair and set a take profit at 0.7090. Add a stop loss at 0.7200. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7150 and a take profit at 0.7200. Add a stop loss at 0.7100. The AUD USD pair tilted lower in the morning as investors reacted to the strong Australian Consumer Price Index, CPI. The pair also declined after the latest American confidence data and the upcoming interest rate decision by the Federal Reserve. It is trading at 0.7140, which is about 2.45% below the highest level this year. RBA tightening? The AUD USD pair declined slightly even after the relatively strong Australian inflation data. According to the Australia Statistics Bureau, ABS, the country's inflation rose from 0.8% in the third quarter to 1.3% in Q4. That increase was better than the median estimate of 1%. On a year-on-year basis, inflation rose from 3% to 3.5% in the same period. Other inflation indicators also rose in Q4 as energy prices rose and the supply chain challenges remained. For example, the weighted mean CPI increased from 2.2% to 2.7%, while the trimmed mean CPI increased from 2.1% to 2.6%. These numbers were higher than the target of the Reserve Bank of Australia, RBA, of 2%. Therefore, analysts expect that the RBA will start tightening in its first meeting of the year that will take place in February. Precisely, analysts expect that the RBA will end or taper its asset purchases in February and then hike interest rates in the second or third quarter of the year. The AUD-USD pair also declined after the latest U.S. consumer confidence data. The numbers showed that confidence dropped to about 113.5 in January. This decline was better than the median estimate of about 111.50. Therefore, with the economy doing well, there is a likelihood that the Fed will hint about further tightening. It will leave its interest rates unchanged and point to making the first hike in March this year. Aud USD Forecast. The 4-hour chart shows that the AUD USD pair has been under intense pressure in the past few weeks. It has moved to about 0.7140, which is below the 25-day and 50-day exponential moving averages, EMA. It has also formed a head and shoulders pattern, which is usually a bearish signal. The Relative Strength Index, RSI, has been in a downward trend. Therefore, the pair will likely continue falling as bears target the next key support level at 0.7090, which was the lowest level this week.